What is going on, you guys, and welcome back to another video on the channel. If it's your first time here, my name is Brandon, and the talks of recession, I mean, maybe this is just me. If you feel differently, you can feel free to leave a comment down below, but I've definitely noticed, on the news, online, even on YouTube here, we kind of stopped hearing about this recession talk. It's definitely taken a back seat and kind of fizzled down, at least in comparison to a couple months ago when that was all we could hear about. And there was a ton of worry, a ton of panic in the market. Now, to me, what's funny about that is that it's almost backwards as to how it should be, because to face the reality of it, we know that we're in the later part of this cycle. Each day that passes by, we are one day closer to this next recession. And although the media and the sentiment has definitely cooled off on the recession talks, I think that now is a very important time for investors to really keep this at the top of their mind. Not to be scared, not to be panicking, but to be cautious when it comes to selecting stocks and going out and purchasing investments for their portfolio. I think a prudent investor should be doing a little bit more research and just taking a little bit extra precaution to make sure that they're going out and picking stocks that will do well. Let me rephrase this. Picking stocks that will give them growth and you can participate in the market as it continues to go up, but at the same time can also do well if and when we do enter into this market downturn, when we do enter into this recession. And that's the topic of today's video. We're going to be going over some of my personal favorite recession-proof stocks. And, recession-proof, that's a term that does get thrown around. To me, it's almost like a finicky term. It's not one that we should be using because in my honest and humble opinion, there is no such thing as a recession-proof stock. It almost makes you think that a stock you buy won't go down, it'll do super well during a recession. That's just not the reality of it. When an economy starts slumping and corporations' profits are slowing, when investors are selling out of their stocks, and there's just this downward pressure on the broader market, reality is majority of companies are going to face a temporary loss. Even the best of companies, our top tier, Amazon's, Microsoft's, Apple's, these companies could very well be down 20, 30%, all right? No company is immune to that. A recession-resistant stock may be a better term, because the companies that I want to highlight today, these are companies that I believe will fare better. They'll fare well during a downturn, and just as importantly, they'll be able to kind of dig themselves out of this hole. They'll be able to rebound and get back on track faster than some companies that, aren't a recession-proof or a recession-resistant stock. Just for interest's sake, before we dive on in just a second into the stock picks, some of the things that I look for when it comes to a recession-proof stock, of course, looking into a company's track record and actually looking back at their history, looking at how they performed during previous recessions, looking at things like management decisions, what they did with the dividend, were there company layoffs. Those are all very important things to look at. We can, of course, look at a company's how much cash they have on hand. So their cash balances, if we take a look on their balance sheet, some companies will be sitting on billions of dollars, which will give them a ton of leeway and a ton of wiggle room during those tough periods. Some companies, they're struggling to even make a profit, let alone have a bunch of money in the bank. So there would obviously be a lot more stress on those companies. And lastly, I like to look at just the overall business model of the company in terms of how they operate, how they go out and make money. Is this going to be a company that will be able to continue doing business normally and continue to operate well, even if the economy slows down? Or is this a company that is going to be highly susceptible to a slowdown in spending and a slowdown in the economy? Those are just a few of the things that I look for, and hopefully throughout these stock picks, I'll be able to display that so that you can go out and kind of emulate it and maybe go out and find some stocks for yourself. So if you enjoyed today's video, as always, give it a thumbs up, and you can learn more. If you're a beginner to the stock market, you can learn more about our Investing Academy. It's that first link down below if you are looking for some additional help on getting started and really tackling the world of the stock market. But our first stock that we'll be talking about today is the company Walmart. And the ticker on this one is WMT. Dividend currently sitting at 1.84%. This to me is a great overall hold and is one that should fare quite well during this upcoming recession? To me, it's a bit of a no-brainer. It's a lot of common sense that goes into that. Being that Walmart is, of course, this massive, massive retailer that provides us with these everyday goods. These are goods that people rely on pretty much year around. They don't really come and go. Groceries, toiletries, and whatnot. These are things that during a recession, people still need to go out and buy. And just to display a good example of this, without getting too into the numbers and too analytical, here's a little table with Walmart's annual revenue. And if we do date back a number of years, going back before the financial crisis, so our last major, the most recent major recession, one thing that we notice here is revenue still growing at a pretty good clip year after year after year. So if we can highlight here through 2007, for example, 2008, 2009, we're still seeing this number bump up. 348 billion, 377 billion, 400 billion, and so on. And it's continued to climb up to today, where Walmart, I believe, is actually the largest retailer in the world. They actually sell the most quantity, or the highest revenue pulled in, I believe, in US stocks, maybe even globally, but they're currently up above $500 billion per year in sales. This to me just shows why a company like Walmart is known as a bellwether, why they're a company that can continue just to operate pretty much as status quo depending on how the market is, especially with this growth of their e-commerce division. I think that's going to help even more during this upcoming recession, just having multiple streams, multiple platforms that people can go out and buy their stuff. Overall, like I said, this is just a great hold in your portfolio. It'll give you growth when the markets are doing fine, as well as protect on that downside. Like I said, you're pulling in the 1.84% dividend, but Walmart is my first recession-proof stock, and I'd love to hear your opinion down below if you feel it's not, because for some reason I see a lot of people online arguing against that. I can't see it, but if you have an opinion on that, leave it down below. Stock number 2 is the company CNR. Canadian National Railway. And funnily enough, no correlation here. The dividend as well, 1.84%. So I don't know how that worked out, but that's just the way it is. And Canadian National Railway is really a fascinating one. This is, of course, one of our major railway providers here in Canada, one of two with CP Rail. They actually have a lot of business that expands to the US as well. It's not just Canada. But you may be thinking, wouldn't a railroad or a railway company be super, super tied to the economy? They're shipping freight across the continent. And if businesses are slowing down, if people are shipping less product because of a slowing economy, wouldn't that be terrible for a company like CNR? Which is a really valid thought. But to take a look at the performance of CNR during the recent recession, so dating back to 08-09, the stock was down somewhere along the lines of 25%, maybe 25, 27% in relation to the S&P, which is the American market, but that being down somewhere closer to 45, 50% over that same time period, which is a very, very drastic difference there. And to me, what that goes to show is, despite this company being so tied to the economy, which it clearly is, because of its wide moat and because of its established network, again, they're one of two major providers here, they're still able to operate. They're still able to do business enough that the share price didn't have to sustain too much of a hit. It actually did fairly well. I actually came across a little quote here, not a quote, a clip here. CN's operating ratio slid during 2009 because of severe freight demand compression, although the company easily remained the most profitable Class 1 railroad on the continent. So a great example of how, being tied to the economy is one thing and slowing demand is one thing, but a company management, the way they're operating, they can still be efficient. They can still go out and do their thing despite being tied to that, which was pretty clearly shown in the share price, right? That's a pretty nice drop, a pretty not nice drop. It's not a terrible drop during that time, which again just goes to show the overall quality of this business. CNR and CP, I like both of the railways, but CNR is just a company that I think is a really great hold. Again, you're pulling in the 1.84% dividend. So overall, this is just another one of my top tier picks when it comes to a recession-proof company. Moving on to number 3, a bit of a controversial one. Fine by me. It's the company Altria. The ticker is MO. And the dividend on this guy, 7.22%. We'll talk about that dividend in just a second. But Altria, if you're not familiar with this company, major producer of tobacco. Actually, one of the world's largest producers of cigarettes. If we've got any teenagers watching this video, 12, 13, 14 years old, I'm sure you'll know Juul very well. This is the company that owns a pretty major stake in the company Juul. This one would definitely fall into the category of what we would call a sin stock. Okay, sin stock being a company that invests in something that's not so ethical. You got your casino companies that would fall here. Obviously, tobacco, even alcohol would fall into this category as well. And if it's not the type of company for you, that's completely understandable. But at the same time, these companies are awesome at generating revenue and selling their product, getting into their market in whichever way they have to, whichever way they can, whether it be right or wrong morally. One thing that we can't argue with is that they do sell a lot of products. And if you know somebody that is a smoker, if you yourself are personally a smoker, I'm sure you can attest that it doesn't really matter what's going on out in the world, who's president, how the economy's looking. You're probably still going to go out and get your pack a day or whatever it is. That's one of the top priorities for somebody that is in this space, for one of their target customers, which again results pretty well for a company in this space. In terms of the share price though, it has been a rough go at it over the past little while. Regulation, a lot of negativity surrounding the Juuls has been a big issue for them, which has resulted in a pretty big drop. In fact, just taking a look here, actually about a 40% drop off their all-time highs back in 2017. And this is a stock that I do believe has dipped into a pretty attractive valuation if you were looking to start a position. With the stock selling off so much, you're now looking at a 7.22% yield. So as the stock has dipped down, starting yield at these levels is 7.22%. And assuming they're able to sustain this, one way you can look at that with this upcoming recession is let's assume you bought a stock like this. Let's assume you bought a stock today, and a year from now it is trading completely flat. All right, it hasn't moved a penny up or down. That 7% that you've drawn in that 7% that you've drawn in as income, that's already matched the average return of the S&P 500 just from that income alone. Now, that's of course assuming nothing happens. Stock may go up, stock may go down, but to have a reliable source of income like that, just as a given, right? Just something that you can really expect with the recession talk coming up, that's something that I could find very attractive. Again, it may not be everybody's cup of tea out there, but if it's something that doesn't bother you and you are looking for an attractive investment to buy currently, this one is definitely up at the top of my list there, with the potential for capital appreciation and of course that really nice yield that you can rely on if and when we do slump into a recession. Pick number 4, our final stock for today's video, which I did save the best, in my opinion, the best for last. If you were thinking about it, it is the company Procter & Gamble, which is without a doubt, when you think of a recession-proof stock, when you think of a staple company to hold, a reliable one, this one is, for me at least, is the first company that pops into mind. And dividend on this guy, 2.37%. Actually, if we take a look at the share price, which I can pop up for you, it has done very, very well as of recently. And this is one that I'd likely suggest having on your watch list. This is a company that I think it'd be hard to argue for someone. It'd be hard to make an argument for anybody out there why they shouldn't hold Procter & Gamble because of the reliable dividend, because of how well the stock has performed dating back a number of years. But for those of you not familiar with Procter & Gamble, this is of course the company that owns a ton of household consumer goods. Some of the better known products, probably Tide, Gillette, Charmin, Febreze, Gain, a ton of names. In fact, a fun fact with Procter & Gamble is that they own about 21 brands. It may even be 22 brands now, but 21 brands that independently generate over $1 billion. Each brand themselves over $1 billion in sales per year. And that's 21 different companies that in and of themselves are hitting major milestones. Procter & Gamble is the company at the top of that. They're at the top of the food chain, the top of the umbrella, really having a foothold in all of that. So again, kind of like Walmart, we don't have to really get back into it, but it's almost common sense that demand for these products, that doesn't really falter. It doesn't matter whether we're in a recession, whether we're not. You still got to go out and get your toiletries. You still got to go out and get your everyday goods, unlike more of a luxurious product. A company that sells more discretionary stuff, those are the types of things that do take hits. Those are the types of things that are susceptible to an economic slowdown. But Procter & Gamble is really, to me, it's just the cream of the crop when it comes to a recession-proof company. Like I said, it's one that I believe everybody should have on their watch list. Not saying now is the time that I'd jump in, taking a look at the share price currently, but keep it on the watch list. When an opportunity comes, which it will, definitely look to add one of the most quality staple companies out there. So guys, those are some of my top picks. These are companies that I believe you can hold in your portfolio. Hold them and they'll do well as the market's pushing up, but they'll also cover your butt when the markets do go down for the reasons that we talked about. Of course, guys, these are just my opinions. These are just my favorite picks. If I missed one that you really like and you think there's a clear option that I should have said, leave a comment down below or drop a comment with your favorite recession-proof stock. I would love to hear what you guys are thinking at home, what the viewers are thinking. As always, if you did enjoy today's video, feel free to give this one a thumbs up. That is an awesome way of supporting the channel, and subscribe for more content because we post videos here every week on the stock market, stocks to buy, all sorts of stuff. And if you are a beginner to the stock market, if you're just starting out and you haven't even got your stuff set up, or you would just like some additional help, you should definitely click the link down below to learn more about our investing academy. We're working with Canadians every day, going through the entire process of setting up their accounts, funding the accounts, choosing a strategy, going out and actually buying the stocks. We do it all online through our online platform, so you should definitely learn more about that if that sounds interesting to you. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.